Good morning, good afternoon, and good evening. It's August the 3rd, Thursday, 6:35 p.m. This is Mark Yu,
And this is Wawi Santos.
and welcome to the latest episode of Mark Yu and Wawi Show. Episode 83, Surprise in Earnings. Is it or is it not? That's the question. We're going to try to find out, right, Wawi?
I think there's been a lot of surprises for the good.
Right. Well, as you may observe, Wawi's still working hard. Wearing his
Still in the office. I just
uniform.
got through with my paperwork.
Wow. Working overtime. Well, that's how we do it, right?
Yes, yes.
Strike the iron while it's hot.
Gotta keep the cash flow going.
Right. Well, so just a quick disclosure, we're not registered financial analysts or financial planner, but we have both experience investing our hard-earned money in the stock market, and we try to record at least once a week. So we have missed the past couple of weeks, but we're gonna make up for it for today. We have, in fact, a very insightful report by FactSet in terms of the earnings performance of different companies. So off we go. First topic is the survey, the sentiments, what the investors are thinking, if the stock market will go up, down, or sideways, or nothing. It's provided by the American Association of Individual Investors on a weekly basis. So this was published just yesterday, August 2nd. There's still a lot more bullish people, 49% compared to previous week at 44.9. So people have turned more bullish this week, and it hasn't been a pretty past couple of days for all the bullish investors out there. Meanwhile, there have been less bearish investors at 21.3. So neutral investors at 29.7%. So a lot of people are thinking that the stock market will be up in the next 6 months or so. A lot more compared to a week prior. The fear and greed index, we are still at greed territory, 74 points. Whereas a week ago we were at 76. So not much movement, still in greed territory. Well, actually last week we were at extreme greed, 76. So the market momentum, we're still way up there compared to the 125-day moving average and the movement of the S&P 500. But if you're going to take a look at closely, since August 1st, since the start of the month, the S&P 500 has turned down quite a bit. So from 4,588, we're down to 4,501. So 87 points have been erased so far in the S&P 500. The stock price strength, new 52-week highs, as we have been discussing or sharing in our messenger group. We've been hitting consistently new highs on some of these stocks. The breadth of swell, we have a strong breadth, although a little bit of downtick here since the start of the month. So some people may be familiar with the ghost month in August. So some people think that ritually, the market kind of follows this and starts a sell-off. So I don't know. I am 50-50 with that, but what do you think? Well, should we believe in those type of stuff?
Well, with the run up that we just had, we should expect a bit of correction. We've had you know, uh, a, a few good months there, at least 5 months of increase in the stock market. So a bit of correction this month is just to be expected.
Right. Well, at least that would be a logical reasoning compared to just believing that the ghost month, every time everything needs to go down in a ghost month. So options market, put and call options. Actually, since we skipped recording for the past couple weeks, I can vividly remember saying to Wowie that we haven't seen this low of a put call options. That was mid-July. But since then, it's actually ticked up. And now we're at 0.8. A lot higher than where we were in June 26. We're actually in the June 1st levels. So there are people now buying some put options to protect their trade or their investments. The volatility, interesting. The volatility index, it has spiked. It actually went through its 50-day moving average. This is on August 1st. Wow. Look at that. At the start of the month, people started selling, it looks like, and people started buying some protection, both volatility and put options. And it hasn't retraced since. So, like what we said, so this could be people taking off some chips off the table and buying some protection, trying to realize some gains.
Mhm.
So volatility, we just talked about that. For the past 5 days, the volatility is up 17%. Wow. And for the Nasdaq volatility for the past 5 days, it's up 14.5%. So quite a wild ride. I bet this just started, the volatility started racing up on August 1st. Yeah. Yep. Volatility started increasing at the start of the month. The Nasdaq, wow, look at that. It was just healthy, hovering above 14,200, 14,200 on August 1st. And then come August 2nd, boom, it started dropping. Now we're at 13,900.
Yeah, I think that's correction right there.
Yep. And for those who are maybe,
Yeah, I think that's healthy correction there.
yeah, the correction usually, starts slowly. Well, there's nothing that holds textbook of correction. A correction could happen right now, which is what we're saying, and technically a correction would be at least up to 10% of a drop. So we're in the early earnings if this would be a good correction. We're now down 2.2% in Nasdaq, and we're gonna try to closely monitor this, as long as we are doing the recordings. But right now we haven't seen this quite of a sell-off. I would say for the past 6 months. So might be a good correction, like what we said, but yeah, most of the time it's just biggest one was back in March, 3.39% of a drop in Nasdaq. So right now we're at 2.69. So we have still quite a ways to go. And this one right here looks like a steep, over time it kind of like dropped. So okay. We actually lost 1,000 points back in February to March 10th. Down 8.7%, close to a correction back then. But I think this is when banks were exploding, right? When two banks filed for bankruptcy.
Yeah, that was at that time.
Yeah, and then the Federal Reserve opened some sort of a rescue package for the remaining banks, curtailing some loans, or what do you call that? Stringent measures, loosening up. So yeah, it could happen over time. It could happen in the course of a month or so, but this is just the past couple of days so far. So for the group or industry for the past week, only two sectors are positive: oil and cyclical. The rest are in the toilet, especially utilities. Utilities are down big, 3.8%. Materials, interestingly, 2.29%. And then technology, wow, technology taking off some gains. People are taking off some gains in technology, real estate as well, healthcare. Well, healthcare has been bad since the start of the year, I think. So yeah, utility for since the start of the year, utilities are the worst performing sector, 6.8% down. Healthcare is down positive 0.09, barely any gains. Real estate 1 point. So aside from utilities, it looks like everybody else, especially technology, up 38.27%, are the gainers so far this year. So yeah, looking at the fund flows, the global money market. So I think we're back to a little bit of a protection here, Huawei. A little bit of a movement going back to money market funds on investor caution. This is about 5 days ago, according to Reuters. A lot of money flowing back into money market. 24 billion. 24 billion in US and 11.8 in Europe. And then global stocks. Oh, they still managed to attract a good amount, healthy flow of $1.3 billion so far last week, contrary to 2.2 billion of selling the week prior. So there has been some selling already while we back in a week ago. So looks like people are slowly pulling out of the market, selling some winners. At the same time, trying to dip their toes back in the global stocks. Sectors that have received a lot of inflows are materials, financials, and staples. Interestingly, materials is actually the worst performing for the for this week. So people who bought materials, who put that 1.1 billion to work, 600 million going to basic materials, already lost a good chunk, 2.29% as a whole. Financials is actually barely flat for the past week, negative 0.35%. Meanwhile, tech faces first weekly outflow in 4 weeks, 1.57 billion in selling in tech last week. The first outflow, that's a good chunk. A lot of people are selling out of their tech investments at this point in time. 157. First weekly outflow in 4 weeks.
Well, they're going into some bond funds, looks like.
Yeah. Bond for 6 billion. 6 billion worth of funds diving in. It's the 5th straight week of inflows to bonds. Wow.
Yeah.
People are buying protection and bonds so far, looks like. Money market as well. People pulling out from commodity funds, which is interesting, despite I think Saudi is cutting more oil production. That's why we're experiencing a lot of gasoline price increase at this point in time. If we're gonna look at Gas Buddy, I think we're at high not seen since March of this year. Because for the first time I had to pay over $20 in my Prius for a full tank. But yeah, I think gas tools here, gas price charts quickly. Yeah, $3.84 a gallon. Not seen since November, actually. We have pierced through the April and May price point peak. So yeah, we're seeing a good amount of gasoline hike. This is inflation right here, guys. So Fed is trying to, fight inflation, but looks like the Saudis are getting their way at this point in time. Oh, this is at the back of really poor performance from big oil, right, Maui? Have you seen those reports? ExxonMobil and Chevron, they dropped their profits, actually dropped more than 50%, I think.
Yeah, I saw BP oil. I saw the drop on BP oil, but I am not aware of Exxon.
Yeah, we could actually take a look right now with Exxon and Chevron, because both of those are in my portfolio as well. But nothing to worry about. This is because last year was really a good year for them. And right now, Wall Street is just, telling their investors, this is, back to normalization. Like not every year, ExxonMobil could deliver a lot of money or, from oil. So if we're going to look at their presentation, oh, there. Earnings, so for the second quarter, oh wait, 2Q 2022, 7.8 billion. So that's a drop from 17.8 billion, nearly 10 billion evaporated from their earnings because of lower oil price. So yeah, that's for the quarter, second quarter for ExxonMobil. For Chevron, earnings release. There you go. Here we go. Earnings. Total earnings. This is the one. 6 billion this quarter alone from 11.6 billion last year. So 10 billion as well have been erased. So this is because of lower oil price, including gasoline, not just gasoline, but also global oil price. But so far, I think Brent oil price has recovered. It pierced through, yeah, it's back to 84. So this is why, if you're gonna go back to the group performance, energy is the one of the only two best performing sectors for the past week because of oil price. So for the past 5 days, it's up 2.3%. For the past month, it's up 11%. Yeah, and we're at the highest actually back in just a couple of days ago for the year. Or yeah, well, since at least January 23rd. So yeah, oil is making a comeback. For those who have given up on oil, who might consider this is not financial advice, but you might want to consider holding on to your oil, big oil. So all right.
Yeah,
Mhm.
as far as I know, Exxon is also diversifying. It's looking at lithium mines right now to invest in.
Right. Yep.
So they're looking to buy
Mhm.
some lithium mines.
Yeah, clean energy for sure. It's the name of the game, as well as profitability. So this is us what we have spoke about. This is just published just this afternoon. Money market assets climb to fresh record. So if you park your money at money market, you'll instantly get 5% a year. We're now at 5.52 trillion ending in August 2nd. This is the highest compared to recent high of 5.49 trillion last week. So this is a chart. This picture speaks thousands of words, or trillions in this case. A lot of money have piled in a money market fund. So just a quick recap on the strongest, not strongest sector, the FANG sector, according to Yardeni. So this has just been published yesterday, which is perfect timing as we record today. Luckily, this is provided freely by Yardeni himself. So the market cap of FANG, Facebook, Amazon, Netflix, and Google, it's at $794 billion. So they comprise nearly 30% of the S&P, just those four companies. So this is just a FANG, so we're gonna breeze through it unless we see a good indicator. Blue Angels, forget that. I think we're gonna skip on the next slide here, because next slide at least we have FANGs. This is uploaded about 5 days ago by no other than Dr. Edward Yardeni. You can actually contact him here, phone number and email. It's really nice of him to provide this freely. So here we go. This is much better compared to just the FANG stocks. FANG are like old school ones. This one is more updated. This includes Alphabet, Amazon, Apple, Meta or Facebook, Microsoft, and Netflix. So the market cap, you could tell here, $9.6 trillion. So I think we're closely reaching that peak there at 2021. This has been like 2 years ago. So watch out on that top. So I'm not sure if we're gonna pierce through that or we're gonna make it. We'll see. So market cap per share. So these FANG companies, the one that we just talked about, they're again at the peak right now, 22% of the whole S&P 500. Another good chart here. Let's see, relative to S&P 500. I'm more interested in looking at their profitability. actually. Oh, here we go. This is good. For the information technology sector, Apple and Microsoft actually presents more than half. Just two companies represent 51.9% of the whole sector for the info and tech, Apple and Microsoft alone. So Apple just reported their earnings. They're actually down 1% post earnings. Let me see if it further went down. Apple is down 2% now post market, probably because of not meeting some expectations there. Meanwhile, for communication services, one of the best performing sector for this year, Alphabet, Facebook or Meta, and Netflix. These three comprise of more than half, 50.7% of the whole sector, the highest they've been since this was conceptualized. So if you're wondering, if you didn't have these three in your portfolio so far this year, you may have missed the FANG movement or the market-beating performance of Nasdaq. Amazon, yeah, Amazon has been sluggish, honestly, but it still represents 30% or a third of the consumer discretionary. Interesting. So they've been flat. I mean, Amazon's been flat since the start of the year. I mean, it's one of the worst performers in my portfolio at this point in time compared to the FANG stocks, the other FANG stocks. Here we go. This is much more that we would like to look at, the profitability. So for the green, it's always been Microsoft who's always the most profitable among the bunch. 35% profitability. But look at the second one, the runner-up. It's Facebook. Look at that. 28.5%. It easily surpassed the purple one, which is Google, and the green one, which is Apple. Wow, it beat Apple. As 728 in terms of profitability because of their decision to cut costs and fire people. So right now, Facebook is 28.5. Wow, the profitability. That's why the market has been rewarding. It's more than double this year, right, Huawei? Facebook, I think.
Yeah, and they probably benefited from the Twitter mess.
Uh-huh.
You know, with Twitter losing a lot of their ad revenues, they've been picking up probably on some of those those ad revenues after Twitter made a big mess.
Yeah, but if you look at the start of the year, January 3rd, it was $124. Right now, it's $313, up 151%. Wow, good job,
Yeah, I
Facebook.
don't know why. I don't know why I didn't pick up on Facebook, but that's one of those things that I missed too.
Oh, that's okay, Huawei. I failed to buy Tesla as well. So next profitable one, as we've said, is Apple, and then Google, and then Netflix, and then of course the last among the group, Amazon, the least profitable at 3.7%. Man, Amazon needs to start growing their profitability. They suck.
Yeah, it's so flat. It's been so flat this past 2 years.
Yep. Yep. FANG forward PE, we are at highs not seen since 2021 again. Again, this is a warning. We're not saying it's going to crash, but right now it's 28.5. 28.5 forward price to earnings for the FANG stocks as a group. So we haven't seen this since 2021. All right, I think we're good. Yeah, well, we're good with the FANG stocks. Mega Cap 5, yeah, forget that. So Apple actually came out with its report. It's down 2%. So according to its press release, this is in their investors website, their services revenue reaches new all-time high. So this is a quote from their CFO. I would rather look at their numbers and look what the analysts are saying, because that's what people, investors take a look when keeping their investments in Apple. So Apple. Recent quarter that ended in July, they actually revenue dropped a little bit from 82.9 billion to 81.79, so not much difference. They became a little bit more gross profitable as higher, but we're gonna take a look at its net profit. Net profit from 19.4 billion to 19.88 billion. So a little bit more increase in profitability, but not so much. In Americas, they actually lost close to 2 billion in sales. Europe, they generated a billion more. In China, wow, a comeback in China here. 1.1 billion more in China.
That's
Japan,
good. That's a good sign.
that definitely is, because China's been not really a pleasant sight for investors this year. They've been struggling to pump up their economy, right, Wawi?
Yeah, yeah. They're still reeling from that real estate debacle.
Exactly. So, and the government in China is actually trying their best to prop up the economy, but consumers, as I've been reading in reports, are still trying to pay down their debt and not taking advantage of the low rates that the Chinese government is doing. The rest of Asia Pacific, oh, okay, down 500 million. So they lost sales in Japan and rest of Asia Pacific and the US. But Europe and China were good spots. iPhone kind of dipped too in terms of category from 40.6 to 39.6. I mean, that's a little bit of the difference, but yeah, still a dip. MacBook sales are down as well, not so much, 7.3 to 6.8. iPad is down quite a bit, 7.2 down to 5.8 billion. Looks like only the services sector and the wearables showed some increase in sales. While meanwhile their balance sheet looks still solid, marketable from 120 billion to 104 billion in marketable securities, which is also considered as cash. So Apple still is a lot packs up a good punch in terms of their cash. Their debt is 98 billion, not much change since last year. Yeah, still pretty good standing. Company is still a cash flow machine. So we're gonna take a look. I think I took a screenshot. Yeah, there we go. Yeah, services and wearables, like we said, are the only two groups that were the strongest in terms of revenues. So this is a good chart from Bloomberg as well. So Apple actually recorded its third straight quarter of decline in sales. So every once in a while you see this in terms of their performance. Back in 2015, 2016, back in 2019, and now in 2023. So some sort of slowdown there in terms of iPhone sales as we have already seen. So jumping on the next one, Amazon. Amazon is actually wow, it's up 8.7% off hours, which is good. 11. So it looks like Huawei
Oh, what happened?
it's making a comeback. They heard us. 8.7% up,
Wow.
140. So now let's take a
What
closer.
happened?
I think it's their reporting. So earnings release. Let's take a look at that. So their sales increased 11% to 134 billion compared to 121 billion last year. And which is more important, of course, is the profitability. Okay, profitability 6.7 billion compared to 2 billion last year, 2 billion of losses last year. That's a good turnaround. That's a good turnaround right there. That's why investors are liking it, looks like. Amazon is doing good.
Well, that's a pleasant surprise because it's been somewhat stagnant on my portfolio for a couple of years, except for a few months this year.
Yeah, they're registering pretty good. So this is the breakdown. We're taking a look at their North America sales. Wow. 8 billion more this year. Oh wow, their operating income. They
Wow.
registered 3.2 billion in North America and 800 million in losses in international compared to 1.7 billion last year. AWS actually slowed down in terms of profitability, 5.36 billion compared to 5.7, but it's still increasing from 19.7 to 22.1 so far this quarter. Yeah, people are liking the performance from Amazon. This is good. Good for us investors.
Yeah, good for me.
Cash, cash looks good too. Cash is
Mhm.
around 70 billion, and then their debt is around 72. Yeah, not bad. Like it. Good job, Amazon. Keep it up, keep it up. All right. I'm gonna take a look at Airbnb probably because they just also came up with their earnings. So Airbnb after hours, take a look at their stock. Airbnb, whoop, about flat, 0.62. So this kind of indicates the travel vibe. Oh, you know what? We have only 7 minutes remaining, and we barely take a look at the FactSet report that we just highlighted. So I guess we're gonna skip on the FactSet highlights here. Huawei, are you okay with that?
Yeah, yeah. All I
Right.
know is the fixed income is going into people are going into fixed income bond ETFs, and they're raising their expense fees, their fees on
Oh,
the ETFs.
I'd rather buy my own stock. So,
I'm like you. Well, I'm like you on that too. But I keep some ETFs.
mhm. Well, this is the key metrics from FactSet. We was just published on July 28th. The scorecard. 51% of the S&P 500s, or a little bit more than half, already reported. 80% of those reported companies have reported positive surprise on earnings, and 64% have reported positive revenue surprise. Earnings decline. Blended earnings decline negative 7.3%. This will mark the largest decline reported by the index since second quarter of 2020 during the lockdown, negative 31.6. So not a pleasant sight in terms of earnings data, but you're going to be surprised for the calendar year this year if we're going to take a look at uh, the charts in a little bit. The valuation, right now we are at 19.4 forward price to earnings, whereas the 5-year average is 18.6 and the 10-year is 17.4. What this is telling us is we're now currently overvalued. So we're gonna scroll down quite a bit here. Here you go. The percentage of companies beating earnings estimates is 80%. This is above 5-year average. So at the sector level, which are the sectors that have outstandingly beat expectation in terms of earnings, which Wall Street loves, is information technology, which more than half is already Microsoft and Apple. So I think this would be lowered down quite a bit because of Apple's performance, I guess. Communication services as well have the highest percentage of companies above estimates. Meanwhile, utilities and financials have the lowest percentage of reporting earnings above estimates. Thus, probably explains why utilities is the worst performing sector this year. So earnings surprise. So which are the companies have the largest positive earnings surprise and estimates? Specifically, we're going to take a look at the companies. CarMax, Newell, D.R. Horton, the builder, interestingly. Ford Motor, another builder, Lennar, another builder, Pultec Group. reported the largest positive earnings surprises. That's why real estate is making a good beat this year. Where are they? Let's see, as a group. Well, not really anywhere. Let me retrace. Real estate is 1.83. Regardless, Pulte, Lennar, DR Horton all comes from real estate, obviously. So information technology again, second largest positive in aggregate estimated earnings. Intel, First Solar, Seagate, Teradyne, Lam Research reported the largest positive earnings surprises. Another sector, communication services, the third largest positive aggregate. Live Nation, Activision Blizzard. I think they've been being acquired by Microsoft, right, Huawei? If I'm not mistaken.
Yeah, yeah, I think it's going through. Yeah,
Yeah,
I think that deal's gone through.
yeah, they trashed the court just trashed the FTC complaint, right, Huawei?
Yes.
Interpublic Group again, Comcast. Interesting. I used to have a Comcast in my portfolio, but I sold it. I wonder where it's at right now. Year to date, it's I don't know. It's not showing up. Year to date, Comcast. Come on, let's go. Time's ticking. Okay, no chart. Never mind. So Comcast and then Netflix, the largest positive device. And then followed by the industrials. You don't see this in recession. Positive earnings estimates and actual reports. This is not recession right here, guys. Right, Wawi?
As far as I know, we had our recession back in 2020.
So for the industrials making a comeback, General Electric, 3M, United Airlines,
Wow.
Masco. I don't know what that company does. Masco. Excuse me.
Industrial, I think. That's an industrial
Yep.
company.
Industrials. Okay, those are for the earnings. Meanwhile, for the revenues, percentage of companies beating revenues is 64%. So this is weak right here. Usually we want to see top line increases or sales also increases. But right now it's 64%. This is below the 5-year average of 69 and barely above the 10-year of 63%. And the sector, again, information technology is the one beating or leading the beat for revenue, followed by healthcare and financials. Meanwhile, the lowest percentage companies reporting revenues above estimates is utilities, materials, and communication. So I think we just have to cut our recording at this point just because we're short on time and actually we're gonna run out of time eventually. Well, I guess that does it for now, right, Wally? I guess we have to end it close this early.
Yeah, well, you went through the big company earnings, and that's good, because they carry a lot of weight when it comes to
Influence in the
especially
market.
with
Yeah. All right. Well, again, this is Mark. You guys have a wonderful weekend. Signing out.
Signing out.